everybody, how's it going? Thank you so much for watching. So today we're going to talk about categorization, how important it is to categorize your in and outflow of cash so that your financials are right and so that your tax return is right. So when you either write a check or have an expenditure and you have a receipt, whatever your software is or your person who puts this and records this for you, always make sure you write down what it's for and be as specific as possible. Add humor, it's great. So like, let's say you go and get gas in the vehicle that is a work vehicle and not a personal vehicle. Put in, especially if you have more than one vehicle for your company, put in that this was fuel for vehicle A and this is the time. Mileage is also a really good thing to keep up with so that you can have that as a deduction. But categorizing stuff, office supplies, office expenses, utilities, phone, these things are very important to categorize, especially like, let's say you make a run to Walmart and you're getting coffee to go in the office, not in the break room, but go in the office for the clients that come in. That is a deduction for your to reduce your income. So you need to make sure that you're categorizing things correctly. If you're buying something to go in the break room, that does not deduct anything. So again, it's very, very important to make sure that you categorize things. If you have a bunch of deposits coming in and you don't know what the income is for, your income could be off. So you need to make sure that if, let's say, you have a building that you rent and you got all that rental income from it, but you also deposit a check for it with a reimbursement from somebody, where somebody paid you over and you reimburse them. That reimbursement doesn't go into the income. It'll go back into the reimbursement where you received too much money. So wherever you put that check in, let's say that time overpayment. So you owed Tom Jones $475 and you paid him $500 by own mistake, and so they sent you a $25 check. You put that $25 check in the deposit with your $5,000 rental income and you just labeled it rental income. That $25 doesn't go there. It actually goes in whatever account you put in the $500 for Tom Jones or Joe Jones. What was his name again? Anyway. So it's very important. So you're going to have an income higher than what you actually have if you're not, categorizing these things correctly. So that's why it's really important to break down your chart of accounts and know what you have, where things are going, what's coming in. It's extremely important. And to be as specific as possible about all your expenditures. If you're donating to charity, if you're contributing to charity, or you're buying signs for promotions and advertising, because that is not a cost of goods sold. Advertising and promotions do not go under cost of goods sold. So you can't use that there. So you've got to make sure that everything is being categorized properly. And it's so, so important because it does affect your bottom line. And when you go to do your taxes, your tax person is going to like you a whole bunch because you have everything right. So I hope that helps. I hope that's very informative. And if you have any questions, feel free to call us, email us, comment below, or whatever else there is to reach out to us. There's a bazillion ways to reach us. McNeer and Crews, we're so excited that you're here on this journey with us, and we hope to be a great service to you.